All right, good afternoon to everyone. Can you verify that you can hear me okay, please?
I can
I
hear.
can hear you.
Thank you very much. And is the video also working correctly?
I can see
Yes.
you.
Perfect. All right, guys. So thank you for that. And by the way, if we ever have a situation during the class that the audio or the video would go out on your end, let me know. Sometimes I don't know what happens on your end. So feel free to jump in, let me know in the chat box, or just jump on your microphone and let me know what's going on. So welcome to your accounting course, financial and managerial accounting. This is a 6-week course, so we are really gonna cover lots of material in this course over that period of time. So by reviewing the information in Canvas, that is the case. So tonight I want to do a couple of things. I first off want to just talk a little bit about the requirements for the course. And then I want to cover some of the key points from this first week in chapters 1 and 2 of your textbook. I assume that all of you have been able to access your textbook okay and get to your assignments in Connect. That is very, very important. If you haven't tried yet to do that, I encourage you to take care of that as soon as you can, so there aren't any problems later on as we get closer to the due dates. So I'm going to go ahead and log into the course quickly and just pull that up here and just point out a couple of things. And really, the course is very streamlined in terms of what you're going to do. So let me go ahead and share screen with you. All right, so in the course, you have 6 modules laid out, and I'll just go ahead and click on module 1. So module 1, you're going to be covering chapters 1 and 2. You have your class meeting tab where you earn points for that. If you are not able to attend the class meeting, then you will watch the video and you will complete the item that's listed under the class meeting tab, which is a short write-up of the topics that we covered and what we talked about in the actual class. Usually I update the grades for the class meetings within 2 or 3 days. So it's not going to show up there immediately. So don't email me and say, I was at last night's live session and I don't have a grade in there. So it'll take a couple of days. All of that gets updated. But trust me, it will get updated. So you're going to be working on that for this week. And you're also going to be doing your Connect assignments for this week. So again, if you haven't started on that, I would encourage you to make sure you get into that as quickly as you can so that nothing is missed. And you have a case study that you're working on for this week as well. So the case study asks you to address several different questions. So make sure when you prepare your case study that you look at your grading rubric. That's always the key document that you want to refer to when you're doing these case studies, because it's going to tell you what areas we're looking for in reviewing and evaluating those case studies. So if you have questions about that, however, you can let me know if there are specific questions. If it doesn't address a topic that you're unsure about, let me know, and I'll be glad to help out. As far as using references go, unless it specifically states that in the assignment or in the rubric, then that is truly optional for you. But with that said, I would strongly encourage you to locate and integrate and cite from those references, because that helps you to develop your research skills and your ability to write in APA formatting. And it also helps your postings to be unique. So when I'm reading multiple papers, if you can do something unique in your case write-up, that's fantastic. If you want to utilize visuals, such as graphs, tables, charts, whatever, that's perfectly fine. I enjoy seeing that variety in your case write-ups. So feel free to take that initiative. You don't have to run that by me, as long as you're covering what needs to be covered in the actual assignment. You'll notice that this week's assignments are due by the end of Monday, August 26th. So that is a few days ahead. And I typically like to set all my assignments due on Mondays, because I don't want to always push everything up against that weekend deadline. So it gives you an extra day to kind of fine tune everything and to get it done. Okay. You will see also on the web page a couple of folders that I've added. I want to point out to you. I've added at the top the chapter PowerPoints. So here you will find all of the documents that correspond to each chapter from the textbook. These are what I generally talk from. I don't read PowerPoints, but I use them to guide through the material. You're welcome to use them if you want. They tend to be a good resource to use, especially when you're reviewing for exams, because the PowerPoints usually have the key information from the chapter there. So it gives you a good idea of what's going to be covered when you take quizzes or you take exams. So put those out there for you. Use them as you see fit. The other folder I added is a folder for our live sessions that we have. I will post the actual live session here in this folder. So once we get finished and the recording saves and it gets downloaded, I'll post the link here. So this is where you can go to actually watch the live session if you weren't able to make it to class, or if you just want to watch it again. Here's where those will be located. Students really like the ability just to go right into Canvas and get to that recording very easily. All right, so that is the overall structure of the course. Again, most of these assignments are self-graded, with the exception of the case studies. So normally, I would expect no longer than 7 days from when you submit the assignment that it's going to get graded. So again, there's very few assignments, primarily just the case studies, the case write-ups that have to be graded manually, but I'll get those done as expeditiously as I can. Great. Okay, let's see. Due dates. I know that all of you are mature enough to manage due dates, but I will say, if you do run into a conflict with a due date, something comes up that you can't make one of those dates, please contact me and just let me know what's up, and I can extend that assignment for you in almost every situation. So don't panic. I know you have families, you have jobs, you have other commitments. So when it comes to that, I'm flexible. Of course, the important thing is that we don't get behind too far, and that we don't have assignments incomplete when we get to the end of the class. So that's what we want to focus on there. Are there any questions on any of the components of the actual? Okay, well, if those questions do arise, feel free to contact me. So let's get over just a little bit to an intro. So again, you can just call me Jay, J-A-Y. I live in Virginia. Actually, I live in the pretty part of Virginia. I live in Southwest Virginia, very close to Virginia Tech. you know where that is. And I have worked in accounting and taught accounting for decades. So it is a topic and a profession that's near and dear to my heart. I really love it and I'm very passionate about it. So in my classrooms, I try to convey that experience to you, especially in a course like this, where I'm assuming most of you are not going to be accountants. If you are, great. But the important thing to think about here from that perspective is, how are you going to use this information? So that's my overall goal in this class, because it is designed as a high-level survey of accounting information. So that's what I work towards. My actual working background is in healthcare. I don't know if any of you are in healthcare. I worked in that industry for 20 plus years in accounting and finance. And finally, I got tired of working long hours and weekends and decided I wanted to go teach. So it is a challenging industry to work in. I enjoyed it, and there are a lot of opportunities in that industry, but sometimes we need a change. So that's the actual hands-on experience where I've had the chance to work on that, and occasionally doing some consulting work now and then. So provides me a lot of opportunity. My teaching style is relatively flexible. I don't want you to feel intimidated at all in terms of commenting, asking questions during our live session, or through email, or however you contact me. With that said, my preferred method of contact is email, of course. You do have my cell phone number in my introduction, and you are welcome to call me and leave a message if you like, or if you want to send me a text message, that's okay. Now, if you send me a text message, a couple of things that I ask that you do. Number one, make sure that you put your name in every text message. I have 300 or more students, so please put that in there. I don't remember your phone numbers. And I would prefer that you not ask me something in text message that is going to take me an extensive amount of time and effort to answer. So try to ask questions in text messages that I can answer, say, in 10 words or less. If it's something that you need to explain, we can either do a phone call, or we can do a Zoom meeting, or we can do an email. So if you guys can help me with that, that would be greatly appreciated. All right, so that is my spiel on myself. Curious to know how many of you live outside of the Eastern time zone. Just pop your hand up there, or stick it in the chat box, one or the other. Or you can actually just tell me. It looks like Shayla has microphone enabled there.
Yes, I'm outside of the Virginia area. I live in Illinois.
Illinois. Okay, so you're 1 hour, correct?
Yep.
Time difference. Okay. Anyone here on Pacific time? No? Mountain time, maybe? No? Okay, good. So sometimes it's very difficult to set times for live sessions. I tend to do them early because people are wrapping up their day, and they normally like to get this out of the way so they can go home, have dinner, be with their family, and not have to worry about a 7 o'clock or an 8 o'clock class. So I hope this works okay for you. Again, these are always recorded, so if you need to go back and watch them, they will be on Canvas. All right, so my goal for tonight is to spend a little time talking about chapters 1 and 2. So I'm going to go ahead and begin with chapter 1. And I do encourage you to make sure that you read your textbook. Your textbook is located on your McGraw-Hill page. When you log into McGraw-Hill and your assignments, you should see a link there to access your textbook. So I would encourage you to read those textbooks and use the PowerPoint maybe to guide you through the material, so that you're picking up on the main points from each chapter, because again, this material is going to move really fast. So chapter 1 really doesn't have a whole lot of information in it, except for an introduction to accounting and a little bit about the historical component of accounting. The one big piece that I wanted to focus on here, well, actually, there's a couple of big pieces. So what is accounting? Well, when I ask students that, most times they come out and say, it's a lot of numbers. It's a lot of math. So that's why we don't want to take accounting. It's all math. Well, there are some math work that we can do in accounting, but it's all add, subtract, multiply, and divide. So it's nothing too awfully challenging, but actually accounting is a very small percentage of accounting is math. So accounting encompasses a process by which we identify, record, and report what we call financial transactions. Financial transaction is any event that affects the overall financial position or condition of a business. So you guys can think of all kinds of examples of transactions that occur in a business. So in accounting, we first have to identify what those transactions are, so we don't mistakenly forget to record a transaction. So maybe if we write a check to someone, we don't mistakenly forget to put that into the check account. So we have to have a way to identify those transactions. So that's the first step. And then the second step is to take those transactions, analyze them, which you will learn about, and put them into a journal. So a journal is simply a compilation of all of your transactions in that journal form. So every time we record a transaction, it gets recorded into the journal. So we could have a very small number of transactions, or we could have thousands of transactions or tens of thousands of transactions in our journal, depending on the size and complexity of our company. So the journal allows us to capture all that information and put it into one place. Then once we have all of that information in one place, we can then move to the final step, which is to report that information. So we identify the transaction, we record the transaction, and then we report the transactions. So we're going to talk tonight, and I'll show you the 4 basic financial statements that we use to report this information. And I'll tell you basically what they're used for. I don't say the word basically. I'm sorry, that really one of my pet peeves. So I'll tell you in general what each statement tells you when you're reviewing it. So our focus then in this class, we'll start out with the transaction identification and the recording, and then we'll get more deeply into the reporting process. So this class is called Financial and Managerial Accounting. So what is the difference between financial and managerial accounting? Well, financial accounting is, as I just said, it's the recording of transactions within an entity to report primarily to external users. So financial accounting focuses on information that goes to external users. Now, it can be used internally as well, but it's primarily geared towards that. So who would be looking at your financial accounting information? Who would be looking at those reports? Somebody tell me who would be looking at those.
A bank.
A bank?
Investors?
Investors?
Shareholders?
Shareholders? The IRS?
Of
Regulatory.
course.
Go ahead, Chris.
No, I said, of course, IRS, like you said, regulatory agencies,
Yeah,
and
regulatory,
any
so-
accreditation.
Exactly. Many types of businesses have regulatory guidelines. So, for example, in healthcare, We have certain information that has to be reported to the feds and to the state. So a lot of that information comes from our financial accounting system. So the other type of accounting is managerial accounting. So what is managerial accounting? Who can tell me that?
Internal reporting.
Internal reporting. So this is information that we capture and report, but it does not get shared outside the organization. So here you focus on things like cost identification, budgeting, analysis of variances, cost analysis of maybe adding a new product or a new service. This is information we don't share. So I live pretty close to a Volvo plant where they build trucks. So their managerial accounting would involve capturing all of the cost of building one of those trucks so that they would be able to manage that. They don't share that with anyone outside the organization. That's very, very confidential. So this managerial accounting is not designed to share outside the organization. So the first few chapters that you do are going to be the financial piece. Then you'll gear over towards the managerial. Probably one of the most common tasks that you would do with managerial is budgeting. So you would prepare a budget and you would use that budget to manage and control your area of responsibility, whether it was organization-wide or department-wide, whatever that is. So you will cover that towards the latter weeks of this course. So that is the basic difference between financial accounting and managerial accounting. Then they go into other types of entities. So in this course, we're primarily going to be focusing on for-profit corporations, businesses that are in business to make a profit. So corporations, of course, are owned by stockholders. So we're going to be looking at the transactions in an accounting system that are recorded for stock. When we, as a business, when we issue stock, and then we conduct various types of activities with our stockholders. So corporations then are owned by the stockholders. And it's important to remember that corporations under the Internal Revenue Code are separate legal entities. Anyone know what that means? What does separate legal entity mean? Shayla?
Meaning they are not together?
They function as a separate organization or a separate entity. So a corporation can borrow money, it can purchase, it can sell in the name of the corporation because it is a legal entity. It can be sued in the name of the corporation. Now, if you went out and started your own business and you were a sole proprietorship, which is a business that's owned by one person, you are not a separate legal entity. Your income and losses would flow through your individual tax return. So you cannot go to the bank and borrow money as a sole proprietorship. You would have to borrow the money in your personal name because you're not a separate legal entity. So corporations can do all of the things that an individual does in the name of a corporation. Okay? So Abba, is it Abba or Abba said that it's a third party? Essentially it is. It's a separate, I'm sorry?
Abba.
Abba. Okay, thank you, Abba. So it is a separate entity. So it acts as a separate party in transactions. So we'll focus primarily on that. So they mention here governmental and non-for-profits. What is a non-for-profit? I always like to ask this question. What is a not-for-profit?
That you don't receive money from it?
I'm sorry, what?
That it's not a not-for-profit means that you're not receiving money from it. It's like that it means that basically you have the organization ran to, I guess, just like give services and not want the money in return. It's not to
Right. So a
receive the money.
They
nonprofit,
don't
a
they
non-
don't
go
aim to
ahead,
seek a
Chris.
margin. I was gonna
Pardon
say
me?
they don't aim to seek a margin. They aim to receive funds or donations to carry out those tasks.
Yeah, like
Yeah.
a
So
hospital or school.
right. So that's an example. Nonprofits are not businesses that cannot make a profit. I want you to understand. Just because you're a nonprofit does not mean you cannot make a profit. What it means is that the IRS has designated you as an organization that is exempt from paying taxes because of a particular service or product that you're providing for the good of the community or the good of a particular group of people, whatever that might be. So a lot of colleges are nonprofit. Can they still make a profit? Yes. But as you said, they can't, I think Tawana said they can't distribute that profit to other people because the money has to stay within the organization. So in our hospital where I worked as a nonprofit, we made profit. If we had not made profit, we would not have money available to buy new equipment or to upgrade our buildings. So we had to have some type of profit in order to do that. Now, there are nonprofits, such as governments, where there is no profit because we know that the primary source of cash for a government is taxes. So when governments do their budgets for what they're going to receive and what they're going to spend, that's going to equal. So if I'm receiving 10 million, I'm going to spend 10 million because that's what I'm receiving. So most times, if there's money left over in a government entity at the end of a year, that entity will have to send the money back. So if the federal government finances a particular program and that program ends up with extra money at the end of the year, they may have to send that back to a particular governmental agency. So when you get into governmental, it's a whole different world because you're dealing with those guidelines. It's a different accounting methodology that we're not going to get into, but it still encompasses and it still uses a lot of the terminology that we talk about here. So I just wanted to mention those to you. So because a lot of people think that nonprofits don't make a profit. And that's not always true, as I just gave you an example. All right, I want to go ahead and jump into chapter 2 because credit unions are a good example of non-for-profit, says Joshua. Okay, they use their profits to give back to members. And that's a good point because it is important to remember that even though a non-for-profit does not pay taxes, it still must report to the Internal Revenue Service. It still must do a return to the Internal Revenue Service each year, but it is just an informational return. And we mentioned financial statements. On that informational return, you have to include your financial statements. So the whole purpose of doing this for a nonprofit is to demonstrate to the Internal Revenue Service that you are committing most of your resources to provide the service or the product that you ask for or you stated you were going to provide in your initial application to become a nonprofit. So the IRS is looking to make sure you've not vacillated or you've not slid into for-profit activities when you were designated as a not-for-profit. So ultimately, if the IRS chose to do so, they could revoke a nonprofit status for an entity and deem it to be a for-profit. So the 990 is all about convincing the Internal Revenue Service that you are still operating for your nonprofit purpose. So if you run across a 990, a Form 990, that is what it is. It's a report. Go ahead, Tawana.
I was just going to ask, wouldn't you be able to set up a business for both? Like when you first set it up for nonprofit and profit, or is that illegal?
Yeah, you would have to go through a series of steps to do that. So to start out as a nonprofit, you have to file an application with the Internal Revenue Service.
Mhm.
And then they come back and they say, okay, we're going to approve you as a nonprofit. So if at some point in time you decided that you no longer wanted to be nonprofit, you wanted to be for-profit, you would have to go back to the Internal Revenue Service and other different agencies and have that transitioned over to a for-profit.
So you can't have both at the same time as well.
Not in the same entity. Now you could have two
Okay.
separate businesses. One's a for-profit, one's a
Okay.
non-profit. But an entity has to be one or the other.
Okay.
Okay. All right, let's get into chapter 2. So chapter 2 is chocked full of good stuff. So here's where we get into a lot of the terminology and the concept of financial accounting. So as I mentioned, transactions are where we actually gather the information that we need about the financial performance of an organization. So we look at a transaction or an event and we determine, or we ask ourselves, is this affecting the financial position of the company some way? If it is, then it is going to be recorded as a transaction. So the whole purpose of having transactions are to group those transactions into what we call accounts. So all of the transactions that we have for cash, for example, are recorded into the cash account. All of the transactions we have for paying our utility bill are grouped into the utilities expense account. So the accounts are where we group like transactions. And what that does is that says, okay, of those 10,000 transactions, here's all of the cash transactions. Here's all of these transactions, so on and so on. So the recording process shows us how we do that, how we record it, and then how we put it into the actual accounts, because the accounts are what we're going to use to prepare the actual financial reports. So they talk a little bit about accounts here. Okay. There are 4 basic financial statements. So a business may or may not do all 4 statements, and sometimes it depends on the type of business you are and how complex your business is. For example, if we go back and we say, okay, Monique's going to start her own business, she can do whatever she wants because she's the owner. So if she only wants to do an income statement, that's fine. That's her business, because no one is responsible for that business or has any interest in that business except for Monique. But when we get into corporations like public corporations simply mean corporations where the stock is traded on a public market. So this is where your big dollar companies are. So Apple, Microsoft, Walmart, Target, you can think of all kinds of public companies. They are required by law to prepare and present all 4 of these statements. So you want to remember what those are. They are the balance sheet, the income statement, the statement of cash flows, and the statement of changes in stockholders' equity. And they tell you here what the brief purpose of each is. So I want to show you as we go through here real quickly what these look like, and you can review these in more depth in your textbook. A balance sheet shows you the net worth of the company. What is that company worth? You know, we hear people talk about what we're worth. This business is worth this much money, or this person is worth this much money. Well, what does that mean? Well, that simply means here's what they own minus here's what they owe, and that gives you their net worth. So on the left-hand side of the balance sheet, we have assets. Assets are things that you own that have value. So whatever you own that has value. So here you see things like cash, inventory, equipment, so on and so on. So that gets reported there. Then the next section at the top of the second column, we have liabilities. liabilities are amounts that we owe. So what do we owe for? Maybe it's just a small item that we owe for, or maybe we have a major long-term type of debt. Maybe we borrowed money, we're paying it back over 30 years or whatever. That is a long-term debt. So you see here in this example, this company has $320,000 in assets. They have total liabilities of $117,000. So if we take the assets, subtract the liabilities, we're left with the stockholders' equity. So this company is worth $203,000. So that's important to know because lenders want to know that, investors want to know that, potential buyers want to know that. If you were going to buy this company, what would you offer them? What would be a reasonable price to pay? Well, look at their balance sheet. That's going to give you what that actual net worth is. And of course, you can do this for your own personal benefit if you want to figure out what your personal net worth is. Some of us may not have a whole lot on that balance sheet, but we could still do it. All right, so here we see illustrated what we call the accounting equation, which says assets equal liabilities plus owner's equity. So whenever we record a transaction and we put it into the recording process, whatever we put on the left-hand side must equal what we put on the right-hand side. So if we put +6 under assets, the liabilities and equity added together must be +6. So whatever amount we enter on one side must always equal the amount we enter on the other side. That's why we call it an equation, and that's what we mean by imbalance. One side is equal to the other side. This is the methodology that we've used for decades and centuries to record accounting transactions. It's called double entry accounting or double entry bookkeeping. So it's the methodology by which we record these transactions. So this goes through and talks to you and shares with you information about some of the core accounts that you would see on a balance sheet. So I encourage you to read through those just to get a general idea of what these are, because again, this class is not going to delve deeply into each one of these. If you were taking a 16-week financial accounting course, yes, you would. But here you want to get a general idea of what's reflected under the assets, what's reflected under the liabilities, and what's reflected under the equity. So remember, stockholders' equity represents the stock that is owned by the stockholders, and it also represents what we call retained earnings. So stockholders' equity is made up of the stock plus the retained earnings. What do we mean by retained earnings? Anyone have an idea?
Money the business
amount of money left in.
after they pay liabilities.
Okay, that would be your overall equity. Okay, Aaron, did you have a comment?
Net in,
Yeah, it's the money that's left in the business after everything else is settled. So retained earnings and
So
paid in
retained
capital.
earnings, yep, is just that. It's earnings or profits. So if a business operates and it makes a profit, that goes into retained earnings. So retained earnings accumulates the profit year after year. So when we do our accounting transactions, when we get finished with a particular period, we're going to take whatever that profit was and we're going to put it into retained earnings. So it's going to accumulate over time. Now, we may choose as a corporation, however, to give some of that profit to our stockholders. Does anyone know what that's called?
That's a dividend.
Dividend, right, Josh? So if we pay a dividend to our stockholders, that has to be paid out of retained earnings. In other words, you can't pay a dividend if you don't have any retained earnings, right? Can retained earnings be negative? Yes. If you have more losses than you have profits, it could be negative. We call that a deficit, okay? So if you look at the term deficit probably the first thing you think of is the federal government. They have the largest deficit of any entity that we have here in the United States. So they have a big deficit. So they spend a lot more money than they actually bring in. And that is done because, number one, they're the government. And number two, they have a ton of extra opportunities to borrow money in order to continue the operation for whatever they provide. It's always interesting to me every time we hear, or we're at the year where we have a presidential election, and usually one thing that you can hear them consistently talk about is, I'm going to reduce the deficit, going to reduce the deficit, going to reduce the deficit. But if you look at the deficit from year to year, there's never been a year that I'm aware of where the deficit has been reduced. So, it continues to grow time after time. So I doubt that will ever happen in my lifetime. Who knows? But it's always interesting to listen to those promises you get during the political election times. Okay, the income statement. The income statement is the statement that tells you whether you made a profit or whether you lost money. This statement takes your revenue. Okay, what is revenue? Revenue is what you earn by providing a service or selling a product. That's revenue. So a business has to earn revenue if it is a for-profit business, whether you're selling a product or whether you're like a doctor's office and you're providing a service. That is your revenue. Expenses are the cost that you incur to earn that revenue. So here we have things like supplies, utilities, employee salaries. All of those become expenses. So we have revenues and expenses that are gathered together and reported on the income statement. So here you'll see an example of an income statement, what it looks like, and some of the different areas and line items in an income statement. And I believe in your homework, you get to prepare a few of these things. Okay, so this gets you familiar with what that general format is. And again, on this slide, they talk about a lot of these different items so that you can know what they represent. And I do want to point out here the term cost of goods sold and gross profit, because you'll see this later. Cost of goods sold is what you actually pay for a product that you're going to sell. So maybe Walmart sells this product for $1 to the customer. They only paid 40 cents for that product from buying it from the manufacturer or whomever. That is their cost of goods sold. Okay, so if I take the $1 that they are charging the customer minus the 40 cents that they paid for the product, I get what's called gross profit. Okay, so many companies manage by gross profit. They say, okay, our gross profit, we need to keep consistently at 40% or whatever. Okay, so that's why when we see in a business, when the cost of products go up, like we have right now in our economy, in order to maintain the same gross profit, the sale price has to go up. Okay, because the sale price minus the cost of goods sold gives you your gross profit. So what's a good gross profit? What's a bad gross profit? Well, it really just depends on the type of business you're in. So if you look at a business like clothing, where there are hundreds of thousands of suppliers and lots of businesses that sell clothing, the gross margin or the gross profit is very small because you're competing against so many other businesses. But when you get into companies where there are a very limited number of providers and you're looking at services that are not substitutable, in other words, you can't get something else in place of that, then the gross profit tends to grow. Okay, so it really just depends on the industry that you're in, and you'll see this if you take an economics course, or if you've already taken an economics course, you'll learn a little bit about some of the characteristics for the different types of businesses. Then we have the statement of changes in owner's equity. Is there a question? Okay, just making sure. Statement of changes in owner's equity. This simply shows you what is your balance in equity at the beginning of the period that you're reporting on, what increased your equity, and what decreased your equity, and what is your ending equity balance. So you'll notice here the two items that increase equity would be contributed capital, in other words, stock that you're issuing and getting money for, and revenue. So revenue and paid in capital increase the actual equity. The two items that decrease equity are dividends and expenses or net losses. Okay, so those are the only four items that affect the overall equity. Paid in capital and revenue increase equity, dividends and expenses decrease equity. So again, if you have more revenue than you have expenses, then your equity is going to go up. So how do you become a millionaire? You have more revenue, or you make more money working than you spend. You have more revenue than you have expenses. So same concept there from a personal standpoint that you would apply in a business, right? The last statement to mention here is the statement of cash flows. This is a very important statement, and it's only been around for roughly 45 years. And the purpose of a cash flow statement is to tell the reader for a period of time, where did my cash come from that I had to work with, and where did that cash go? So I had this much come into the business from these different sources. We call those inflows. And I had the money spent on these different areas. That is outflows. So this helps an organization better manage its cash flow, because I always tell students, it doesn't matter how much profit that you have on an income statement. If you don't have any cash, then you're not going to be able to operate your business successfully. And you know, there are businesses out there that show lots of profit, but they're cash poor. One of those being specifically healthcare. Because in healthcare, when someone comes to your hospital and you provide them a service, that's your revenue, right? And the first thing they're going to say is, bill my insurance. So now we have an accounts receivable, and we don't get the cash for that. We have to wait until we get paid. So if we don't get paid, then we have to absorb that cost and get nothing for it. So we can have lots of profit on our income statement, but if we aren't collecting our cash that's owed to us, then we could have very minimal cash. And this has always been a challenge in healthcare, because we have so much of our revenue in accounts receivable. We don't get paid at the time we provide the service or sell the product. Like Walmart, you pay for that when you go buy. Well, healthcare is different. So there are some industries where we have to work harder in order to maintain our cash flow than in other industries. All right, you will want to look at the relationships between the different types of accounts in your accounting equation. So they're going to go through some different events here for you to look up or to look at. That's going to show you how they affect the accounting equation. Just remember that whatever happens to the value on the left-hand side of the equation must happen to the equation on the right-hand side. Now, you could have a transaction where one asset account goes up and the other asset account goes down by the same amount. For example, let's say you buy a piece of equipment for your business. Well, equipment is an asset, so it's going to increase. That account's going to increase, but you're spending your cash. That's an asset, so that account is going to decrease. But when you add those two together, they net out to zero. So you don't have to enter anything on the right-hand side of the equation, because the total difference or the total net under your assets are zero. So you may have transactions where you're only entering information on one side or the other. as long as those two sides balance. That's the whole key in the double entry process. They spend some time here talking about some of the theoretical foundations and principles and assumptions that we have in accounting. Accounting has guidelines by which we operate, and we do that to ensure that we get consistency, we get reliability, we get comparative value, we get objectivity, we get transparency. And as you read through this chapter, they'll talk a lot about these different concepts and these principles around which accountants operate. So people think of accountants typically as very conservative people, and I would have to agree with that, because as an accountant, we practice conservatism. What that simply means is when we're looking at a transaction, we take the safest approach in making those decisions. For example, if someone came to me and they said, you're going to owe somewhere between $500 and $800, I'm going to record that at $800 because that's the safest option for me, because 800 is the most I'm going to have to owe here. If I put it in at 500 and it comes back being 800, then I will have under recorded that. So conservatism means to take the safest approach when you're analyzing and recording these transactions. And there are going to be some transactions where you have to do that, where you can't always know for sure what that amount's going to be. So you'll see some of those as you work through your chapters. Okay. Last thing I'll mention here is the term accrual accounting. Accrual accounting is one of the two methods that we use in recording and reporting transactions. The other method is the cash basis method. Cash basis method simply says revenue is recorded when the cash is received. Expenses are recorded when the cash is paid. So if I treat a patient today in my hospital and they don't pay me today, I don't record that revenue. If they pay me 2 months from now, that's when I record the revenue, because that's what cash basis accounting says that I do. Accrual basis accounting is what we typically use in the majority of businesses, especially if we're following the standards that are set out in what we call GAAP, G-A-A-P, generally accepted accounting principles. So GAAP is written around accrual basis accounting. So what does that mean? GAAP says, or accrual basis accounting says, revenue is recorded when it's earned. Doesn't matter if you get paid at that time or not. So if I were using accrual accounting, when I provide that service today, I will record that as revenue today, because that's when I provided the service. Okay. Expenses are recorded when they are incurred. So if I go to a supplier and I buy some items to use in my business, but I don't have to pay for them for 30 days from now, if I use them today, I'm going to record them as an expense today, because that's when I use them. So with accrual basis accounting, we don't take into account the cash piece. We're more focused on getting the revenue and the expenses in the correct period in which they were actually incurred. So we want to make sure everything that happened in April gets into April, or so on and so on and so on. So accrual basis accounting is designed to help us meet what's called the matching principle. And you'll read about that in this chapter. Okay. So there's a lot of theoretical terminology here that you would want to be familiar with. And generally, I wouldn't memorize those things. Just know what they are and what they stand for and what they mean. Objectivity, you guys know what that means. Conservatism, comparability. Most of these characteristics are in place because we are allowing, or we are providing this information for someone else to use. So if we're not embedding or ingraining these characteristics into our accounting system and our reporting, that could result in inaccurate or untimely information that someone might use to make the wrong decision. So read through some of those characteristics. All right, so this week you're going to be working your Connect assignments from chapters 1 and 2, primarily from chapter 2. You're going to be looking at some of the different components of financial statements. You're going to be looking at the accounting equation, doing some exercises in that area. So you do want to work through this till you feel relatively comfortable with it. And the reason I say that is everything we'll do in the coming weeks is built on that accounting equation. So what we're going to do is we're going to take that equation and those accounts and we're going to build on that. So you've got to understand the concept of the equation and keeping that equation in balance. Okay? So remember, no one sees your journal. No one sees your transactions. What they're going to see is your financial statements. They're going to see that income statement, that balance sheet, and so on and so on. So if you're not an accountant, you're not going to be involved in this actual transaction processing. You're going to be using the information that's given you. Now, this whole course is designed so that you know where that information comes from. That's why we're doing this transaction section. Okay, so I hope you'll take time, read the material, study, and get generally familiar with what this process is. All right, does anyone have any questions in wrapping up?
I have 2 questions.
Go ahead, Josh.
One about the case study write-ups. The way I'm reading this is it's academic style APA formatted paper, correct?
Correct.
Like all my previous classes been like single spaced business brief kind of formatted. I just wanted to clarify.
Yeah, so you want to do APA. So what I'd be looking for there is primarily double spaced, the use of subheaders to break up your topic if that's applicable, having your citations in your paper when you're citing your references, having those there, and then having your reference list at the end. So I'm not a nitpicker when it comes to APA. So as long as you're complying with the basic guidelines, no worries.
Okay. The other question I had, the exams. Look, what is the format? Is this like a multiple choice, a application based? Is it fill in the blank?
It's going to be primarily application based. Let me take a look at that, what the actual exam question structure is. So give me just a moment to look here and I can answer that question.
Are you talking about like the assignment exams?
No, the actual midterm. There is a midterm exam, exam 1, that's at week 3, and then you have exam 2 in week 6. So let's see, it's 50 questions, and it is made up of it is completely multiple choice.
Okay. Yeah, that makes it so much easier.
Now, with that said, you may have to do calculations in that question, but the actual answer is going to be in the form of a multiple choice. Okay.
Okay. Yeah, it just helps with my studying on how to.
Sure, absolutely. I understand. All right, so thank you guys.
I had a question about the exam too. I think I'll put it in the question thing on the in the class, but I'll ask. So as far as the lockdown browser, it's probably gonna be the first. Well, no, I had like 2 classes. I know that typically different teachers put whatever they want. As far as what you can do or what you can't do.
Okay, I'm glad you brought that up. Glad you brought that up. So what I'm going to say, at this point is, I will tell you next week what the requirements are going to be on the exam. Okay.
Okay, so good, because
normally,
I want to make sure how I'm studying too.
Normally I don't.
Gonna be open book.
Normally I don't use the lockdown feature because it's very difficult sometimes for students to manage it because you're scattered all over the place. And you know, you're adults, you know what you need to know. and you can take the exam without that extra pressure. So most likely that's the direction we'll go in, unless I'm told differently, that I have to do it to lock down, but I'll let you know for sure next week.
Okay, thank you.
All right. All right, guys, I hope you have a good week. We have 1 minute left. So I hope you have a good week. It's getting close to fall here in Virginia. So actually got down to the 40s this morning. So that was really nice for a change. So fall is not far away. Again, if you have any questions and need help during the week, please contact me. I'll be glad to jump in and assist you in any way I can. Take care. I'll see you next Wednesday.
Thank you.
Thank you.
Thank you.
Have a good night.
Good night.
Bye-bye.
Bye-bye.